We're back, live in studio with Samuel Azurzer in the business headquarters of Radio Shalom 1650 AM in Montreal with the Money and Business Show. You have questions about your personal finances? You need advice in making sound financial decisions? Samuel and his guests are ready to take your call at 514-738-4100, extension 200. And now, back to the Money and Business Show.
We're back to the Money and Business Show, Radio Shalom, CJRS 1650 AM in Montreal. Thank you for tuning in. I just heard a rumor also. I think they just voted into a pope. A new pope was voted. So I don't have the name, but I know there's a name out there. And there's a new pope, so I'm sure this is... Nathan, you don't have to answer. Don't worry, it's a fine. You don't have to answer. We have Nathan Farkas, is a CPA license in New York, Quebec, and Ontario. And today, especially if you're an American living in Canada or Montreal, Toronto, you got to be listening to the show because he's going to now show you, hopefully maybe at the end of the show, how actually you can make money if you're an American living here in Canada. But you know, we've all been to Vegas, also Atlantic City, gambling. Can Canadians who won money at the American casinos, okay, get their taxes back?
They could. There are many games where if you win money, they're going to have taxes withheld from the winnings. But if you could document the losses that you also incurred, they're going to allow you to file a tax return, offset the losses against the winnings.
So wait a second. You go to Vegas, right? You have a little fun, and then you win, I don't know, $10,000. Do you have to report that?
You don't technically have to report it because they're going to take the taxes off the top as if you didn't.
Okay.
But if you went to Vegas, won $10,000, but you also lost $5,000, you could then turn it into a winning of $5,000, and you'll get the difference in taxes back. Or if you took a different trip to Atlantic City and you lost $15,000, you'll now get all your taxes from Vegas back because your overall gambling losses...
You know what? I didn't know that. If you are Canadian and you won money in the U.S., you have to report it. Is there a limit to this or a minimum?
There's no minimum.
Let's say if you won $100, you have to...
If you win $100, no one's going to give you the time of day. The law says...
If you won $1,000...
It's questionable. The law says you have to report a winning of a penny. But in practice, the winnings have to be significant enough for the casinos to withhold money. If you win $5 playing the lottery in Plattsburgh, the guy at the desk is going to give you your $5 and go away.
So what about the games like blackjack, I don't know, craps, roulette? If you won any of those, I mean, I don't know how you can prove that. Does that also...
Ironically, those three games will not have taxes withheld. The IRS practice is it's too hard to determine winnings and losses in those games. So those games, you get a free pass on taxes.
Really hit it on the nose there. Blackjack, craps, roulette, you are not taxed.
Correct.
Wow. If you won the lottery, you're taxed.
Big time. If you win the lottery, you're going to pay a large tax on it.
So basically, it's a lottery that you're going to pay a tax, right? I mean, if you go to the casinos and you play the slot machines, is that also taxable?
It is taxable if the winnings are large enough for them to care.
Okay, but how would they know if you won $500, $1,000, or $10,000? How would they know that this is cash that's given to you?
Unfortunately, slot machines aren't quite as unsophisticated as they used to, where you threw in a quarter, pulled the lever, and money came out. Now, they all have computers inside them. They know what they paid out. The casino knows when they paid it out to someone. And if it's
because
a large
they'll give you a check, right? They'll give you a check minus the taxes.
Exactly. Now
on the spot.
Exactly. They're going to give you a check, and they're going to take out the taxes, and they're going to issue you a form so you can get the taxes back when you file a tax return.
So for everyone out there who's listening, if you're gambling, even in the Aqua...
Oh, the casino in Akwesasne, New York.
Akwesasne, New York.
Right over the border near Messina.
You still have to pay taxes there?
Yes, you do.
Oh, really? Okay.
Natives run it.
Natives run it.
Natives
Usually
run
here,
it,
you don't pay any taxes.
True. But natives run it. But if you're not a native, you have to pay taxes on it.
So if you're in Vegas, Atlantic City, you do have to pay taxes?
Correct.
Okay. Now, let's get away from the gambling, the gamblers, to the estate tax. Does that affect any of the Canadians? U.S. Canadians?
That can affect not only U.S. Canadians, but it can affect regular Canadians as well. Regular Canadians who own a vacation property in Florida, they may be liable for estate tax on it. Canadians are liable for estate tax on U.S. source assets, while regular Americans are liable for estate tax on all their assets.
All their assets?
An American pays U.S. estate tax on all their assets, wherever they live in the world.
So, what, 5 million?
The thresholds right now are 5 million, based on the law that came into effect at the beginning of 2013. 5 million, give or take, is the limit.
Okay, so what are the common scenarios where an American living here, let's say in Canada, Montreal, Toronto, any of the major cities, owe tax to the U.S. government?
One very common scenario would be the sale of a home. Now, you have a couple, bought a home in the 60s, looking to move on to a retirement home. So it's 2013. They want to sell it. The gain, quite a few $100,000.
In Canada, you're talking about?
Right.
Okay. Now,
that gain in Canada isn't taxable because you have the principal residence rules. But
in the U.S.,
you have an exemption only of $250,000 per person.
Right.
So your $600,000 capital gain on your home in Westmount will be taxable largely in the United States. So it's going to cost you a pretty penny to sell your house if you don't have the proper planning for it.
An accountant will tell you that, right?
They should. If they don't do their job properly.
They'll come to you, right? You're the expert. That's what you have to say, Nathan. You're the expert.
That's my job. I consult people on how to help avoid these taxes. Now, what an American here can do, if you're married to a non-American, let the non-American own the home entirely. Then the gain will never be taxable in the United States.
What is your website again? So if anybody needs to go on your website to get a little bit more information or your contact information.
Okay, my website is ustaxesincanada.com, and my phone number is 1-800-905-0380.
What penalties are involved for failure? Okay, this is a very important question to file these type of forms. I mean, must be steep, right? I mean, the IRS, I mean, look, the United States is not doing very well.
Right, the standard
financially.
The U.S. is in trouble financially, and the standard penalty for not filing a form is $10,000 per occurrence. And that's for any type of form. So one of the other scenarios for previously, if you have an RESP, you have a trust, that's a foreign trust. You have to file a form to declare it. $10,000 for not filing the form. A tax-free savings account.
That's another $10,000.
Foreign trust, another $10,000.
A margin account, another $10,000.
Margin account, if you don't declare.
Oh, it's a lot more.
$10,000 also. But with a trust, you have $10,000 for not declaring it on one form, and then 35% of the total account value for not declaring it on another form.
Oh, if you have a trust company, is that it?
A trust.
A trust.
A simple RESP for your kids' education.
35%?
A tax-free savings account.
Wow.
If you don't declare it properly, 35%.
Almost a third. Off the bat.
Exactly. And that's per year that you didn't declare it. And if you have mutual funds, any Canadian mutual fund, at best case, you're just taxed very heavily on it. Mutual funds are one thing that Americans living in Canada should not buy ever. Because if you're...
repeat that again so our listeners should understand.
Americans living in Canada should never buy a mutual fund.
Why?
At best, because a mutual fund is classified in the United States as a passive foreign investment company. Back in the 80s, the American mutual fund industry was having trouble because rich Americans were going offshore to the Caymans, to Switzerland to invest because there was no tax on it. So the mutual fund industry lobbied Congress to change the rules on foreign mutual funds. And now, every year, you have a foreign mutual fund, you have really two options. Record the gains that you earned, even though you didn't really earn it. Record the gains that you didn't earn on the increase in value of the fund, or essentially pay taxes and have them be attributed to every year you owned the fund. So if you bought a fund in 1988 and it's now 2013, you might have to pay taxes on it going back to 1988. And since you didn't pay your taxes on it properly in 1988...
You don't have to, you know what? You don't have to go on. Just sell your mutual fund, period.
Sell it and make sure that I am around to report it properly. Because selling it doesn't solve the problem necessarily. You have to report the sale properly for the sale to be treated okay.
These are proper forms that you legally...
Right. It's a simple form to fill out, but you have to know how to fill it out properly, because if you don't fill it out properly, your election is not valid, and you're going to be taxed back to 1988.
Nathan, what about willful violations? Is the penalty more than 35%?
The willful violations rules are primarily on the FBAR. It's basically...
The what?
It's the FBAR form. It's a form where you're supposed to disclose...
FBAR.
FBAR, Foreign Bank Account Report. It's a form where Americans have to disclose to the U.S. Treasury all their financial accounts outside the country. So if you knew that you had to file it and you chose not to, the penalties are up to 50% of the account values, or 100,000, whichever is larger, plus 5 years in jail.
You said 50%?
50%.
What happened if you forgot? I mean, you filed it for 10 years, and 1 year you, you were at the hospital and you couldn't file it properly.
Well, if you forgot and you have genuine reasons for not forgetting,
okay, then
the IRS has in their
more flexible.
And that's for all these forms. If you have reasonable cause for not filing the form, then you're not. Then the penalties can be forgiven. And if you
don't have reasonable, it's 50. You said 50%.
50% or $100,000, whichever is higher, plus 5 years in jail. Not a fun penalty.
No, that is no, not good at all. Nathan, this is where. I wanted to ask you this question because now you've been talking about penalties and you've been talking, if that, if not, jail, 100,000. You know what I'm talking about here?
Of course.
There's a lot of talk about penalties for not properly filing American taxes here, Nathan. But for some people, there are benefits to what's going on here, right? Is that right? I mean, you could actually make money, right?
There are people who are making good money from Uncle Sam every year.
How can Americans here in Canada make money from Uncle Sam?
Right. This is one of the few benefits the Americans actually offer to Americans outside the United States. The earned income credit, only for people living in the country. But this is the child tax credit. The child tax credit, for anyone who has American citizen children, files their tax returns, your credit is 15% of all income above $3,000, up to $1,000 per kid. Now, I had someone come to me recently who was worried about having to go to jail, paying large fines.
Jail?
They never filed. They saw the reports in the media. They didn't know what was going to happen. They came to me, and they were worried about paying penalties. I told them, well, the only thing you're going to have to pay for is getting the returns done. You're actually going to walk away from this with a few $1,000s profit. That's file 3 years worth of tax returns, and they had 3 kids. That's $9,000.
So you can get $3,000 per kid. Is that
$1,000 per kid per year.
Per year. So that's 3 years.
Exactly. They filed 3 years of returns.
And this is a child tax?
It's a tax credit available.
Say it again. It's a tax credit?
It's a tax credit available to those with American citizen children.
Okay, and they can get $1,000 just living here. Why would they do that? Why would Americans give back money?
Well, that's just how the law was written. It was part of the stimulus programs put in by Bush and Obama way back that this credit becomes refundable. Normally, this credit used to only be offered against taxable income. So if you owed taxes, they would give you the money against the taxes you owed.
It's not part of the sequestration, right?
This has nothing to do with the sequestration.
Zero. Okay.
This is simply something that's been on the books for a while, and it's recently, actually, in January, was extended to until 2017. So for any American with American children here, now's your chance to get the money in.
Well, let me tell you something. If you are interested, please get in touch with Nathan Farkas. Okay, very important if you're an American, if you want those thousands of dollars coming into your pocket. Nathan, just that we have a couple of minutes left. In general, what can you say to American expats here in Canada?
Well, for the Americans, what you have to do is you have to start filing or continue filing if you have been. You have to make sure all your reports are filed in a timely manner and in a complete manner. But once you're filing, everything is generally going to be okay. All these penalties that you hear, it's for not filing information forms. Get the information forms filed, you'll be fine. And who knows, if you have children, You'll even walk away with a few bucks.
Snowbirds too, right?